What up, what up, what up? What up, people? Happy Wednesday. Welcome to Wealthy Wednesdays. This is the Finance Rebel Show. Tonight, we're talking about life insurance. The question tonight, though, is life insurance a scam? And I brought some backup because I needed some help with this. There was some smoke on these internet streets about this. So I said, you know what? Let me go get the smoke starter, the fire starter, who was in the middle of this. But I'm saying that all in fun. It's all in fun. My guy, Charles Tanks Harris, is in the building.
What is up, Finance Rebel? Kamari, I had to shout you out when I started the trouble. I said, first of all, I don't go to fights one-on-one. I'm jumping cat. Second of all, I know we have like-minded views on a lot of things financial. So when I saw the topic, I chimed in because I didn't like the way the promotion of the information was coming out to the people. So I had to say something, bro.
No, I got you. But we're gonna get into it. There was a post that was circulating on TikTok that made its way into Instagram, and then made its way to a pretty popular person. And Tank got in a little tete-a-tete. It wasn't really nothing, y'all. I'm just playing. It was two men having a grown conversation, which I actually loved and I enjoyed. There was none of the cattiness, none of the throwing under the bus. Tank shared his opinion. Someone else shared their opinion. And I'm going to bring it up, and then I'm going to bring up the clip that we're referring to. But while you're waiting, please share this out with anybody who wants to know about life insurance, because we're going to talk about life insurance. We're going to talk about is or is not life insurance a scam, but we're also going to break down what life insurance is actually for and who it's for. And actually, I just remembered we are one day away from Life Insurance Awareness Month.
Life Insurance Awareness Month.
So
Yes, sir.
this is great timing. You probably should have waited a day, but it's all good. Better early than late. And really talk about life insurance, because a lot of people don't understand it. And a lot of people have had some bad interactions with it and now have negative feelings towards it. But before we get to that, Tank, tell everybody why you are qualified to be.
I appreciate that. So this is what I posted on the brother's comment.
No, don't
I
go there. I got you. But tell
no,
people
I'm not.
why
I'm
you're
not.
qualified to be.
What I'm saying, I'm posting the credentials that I said on the comment about myself. 27 years in this business. I started at Smith Barney in 1997, and
Wow.
I am life insurance licensed, life and health, accident. I've passed every exam that you need to have to be able to sell life insurance or securities. So my background, and I've worked for one of the largest life insurance companies out, which is the New York Life Insurance Company. I've worked there for 6 years, from 2013 through 2019. So I feel as though having the ability, and I don't sell life insurance now. That's the other caveat where, so most people might not say that makes you qualified, but I have a hard time sometimes hearing people tell you what you should do when they benefit from you doing what they're telling you to do. I am not a life insurance salesman. So when I tell you to buy life insurance, there is very good rationale behind my beliefs. I can back them up. I've taken every exam that you would need to know how to learn the intricacies of it. And I've also used life insurance for my clientele from both the pure usage of what it was designed for all the way through high level tax planning. So there's not an element of life insurance or the way you put life insurance into one's life that I have not had real world experience doing.
All right. And I, like Tank, basically have had the same kind of career trajectory, except I have more tax experience than Tank. He's a couple of years older than me. Because you said you started in what year? What year?
It was November of 1997 that I got hired at Smith Barney.
Yeah, so Tank has got me by a couple of years, y'all. But it's all good. It's big bro. But I've been life and health licensed series 7, 6, 63, 65. And I don't really like talking about it anymore. I let go all of my licenses because in my particular situation, I always felt like they were more for selling than
Yeah.
actual advising. And I always had a problem with that. I've been threatened to be fired like Tank, I actually worked for probably the biggest life insurance company at one time. I'm not sure if they're there now. I'll say the one with the Snoopy. And I worked in estate planning, succession planning, key man insurance, regular insurance, tax advantage life insurance planning, executive compensation, all of it. And got to work at it at a high level because the agency I was at was actually, on any given year, the number one agency in the Snoopy empire, to say the least. So, been around the block for a while. We've both been around the block for a while. Now, I want to show this clip, and this is a very popular guy. So before we get going, right, this is by no means to start a fight, to throw the smoke. This is all in love, y'all. This is all in love. With two black men and looking at another black man here. So right here, we're looking at Wall Street Trapper. Shout out to Trap.
What up, Trap?
Tank shared his commentary on this post. And what you're looking at here is a remix on Instagram of Alex Hormozi's TikTok talking about his life insurance scam. And we're going to get to that in a minute. We're going to break that down. And so Tank was a little upset because I'm trying to find your comment. I know why you were upset. But before we get going, I do want to read Trap's caption. He asked the question, have we been lied to about life insurance? Is he speaking valid facts? And he's speaking of Alex Hormozi. I've been told that life insurance is and should be the catalyst to wealth building. When I look at all the wealthy family blueprints, they include life insurance of some kind and trust. How do you feel about Alex on this? All right, so that was his comment. And I don't want to speak for Tank just yet, but I know why you said what you said, but I want to try to find. Here we go. Now, Tank, you want to read your caption? Can you see it?
I don't believe that I can, but let me see. I put my glasses back on.
Let me see if I can blow it up. I know we about to enter nursing home status, so.
You know, your boy getting old. Yeah.
Hey, man.
All right.
Listen.
So are you able to scroll it as I read it?
Yes.
Okay. So my comment was, this is ridiculous. Our people deserve better than to have someone that they look up to, like you, Trap, promoting one-sided information. For the record, I don't sell life insurance, stocks, bonds, mutual funds, or any other financial instrument. I have worked at brokerage firms like Smith Barney, UBS Financial Services, and insurance companies like New York Life. I have passed the Series 6 exam, the Series 7 twice, the Series 63 twice, and the Series 65 twice.
You
I
got a lot
have
of
been,
redos.
yeah, I left and gave all my licenses up, then went back in the industry, had to take the tests again. I've been life and health insurance licensed as well. I've been in the financial services industry since 1997. And then I asked Trap, please convey even-handed information and don't guide our people into financial ignorance by creating fear. The most important thing to realize about personal finance is that it is personal. That is a line from my guy at the Finance Rebel. He coined
Then
that.
he tags me in.
I got to bring him in. You know, I'm not going dolo into these battling streets. Don't let horror stories or poor research shape your future. Know the facts, then attack.
All right, so you said that with your chest.
I said that. Bang, bang.
Yeah, you said that with your chest. Now, he tagged me in it. I read it. I saw Trap's opinion. I didn't really think his comment was bad. I was surprised Trap responded. Trap's got like 1 million followers. So, you know, me and Tank, we chump change out here. But Trap did respond. And I thought it was interesting, right? So Trap says, well, wait, first and foremost, I'm not promoting anything. If you read the post and the caption, you will see where I say that I'd been taught. And then I follow up with asking a question. It proves one that you don't read, and that is the biggest killer of our people. We attack and don't read. And once you read my comment, you'll defend your statement instead of saying, my bad, Trap. I didn't read. I only responded. All right. Then he says again, second, what he's saying isn't 100% wrong. But the one thing I've learned is people will defend their beliefs before doing research. Thank you. Want to read your response?
I do. I do want to read my response. Because I took his comment. I definitely understand that when someone comes at you, you gotta defend yourself. But let's say what my comments were. At the Wall Street Trapper, I said, "Black man, you are being presumptuous with what or how I will reply. I observed the entirety of your post. My position isn't that you agreed with what this person was saying, because unlike the finance rebel, who's much more knowledgeable about these cats out here, I didn't know who the dude was, who he was remixing with. So I just said, hey, I didn't say you agreed with this guy. Only that so many people follow you and your advice that they won't dig deeper by and it says reasoning, but the word was reading. By reading the comments under the post, my concerns are validated. Because when I started reading the comments, everybody was saying, yeah, it's a scam, it's a scam. So they did exactly what I was concerned they would do. My concerns were validated. I also didn't say he was 100% wrong. People rarely are 100% wrong. I stated that the information could lead our people astray. You didn't make the statement, so it is not you with whom I am disagreeing. I love that you have our people thinking about finance, money, and investing. Keep up the great work. So, I of course want to keep it Gucci with him, keep it above the fray. It wasn't personal in any way, shape, or form. But I also say, my before you're a great host of this show, so I'm not going to run on at the mouth. I'll let you tell me how to direct the comment, but I feel I have to say this one thing because it fits here.
Okay.
I used to be, and I've people know this about me, I used to be a professional blackjack player. I didn't always use my math skills for finance and actuarial science and all the stuff I was trained for. I used to take it and go around the country and play cards and count cards. And my pastor once said to me that although I don't feel as though I'm gambling because I have a mathematical system I'm using, he said we have a responsibility to make sure that other people who see our actions won't stumble because they're watching us. It's bigger than just not doing wrong. You want to make sure if you can drive really, really good, so you feel as though speeding is okay, and your son's about to get his learner's permit and is watching you speed, he's going to speed. Maybe he can't do it as well. You have a responsibility to make sure he doesn't by driving within the speed limit. I My point to Wall Street Trapper was you put one caption, one in, and I don't know the proper internet terms. The headline you put up, along with the content of what the gentleman was saying, leads people to believe that you are in agreement with him. And your back page caption, all the stuff that people had to click on to see, yes, you did level the field and say, I've been told this. Is this true? It's like putting a headline on the front of the page and the story on page 72. People are going to read the headline, they're going to dip. And our people need better guidance than that. We're new to this finance thing. As he likes to say, his tagline is Wall Street looks like us now. Well, it doesn't yet. That is maybe we'll get there one day. But Wall Street very much still does not look like us. But when we're trying to get there, we need all the help we can get. We need the extra explanation. We don't need this jarring headline and then the facts over here in small print.
Gotcha. Now, I got to read the sis. I saw the sis chimed in on this, right? Sis being Courtney Richardson, aka the Ivy Investor. So she said, yeah, no. Whenever I see these posts, it tells me that people don't understand financial planning. Tank and I have done an episode on that, which includes protection, insurance, and income generation. Many IULs, VULs lapse because the cost of insurance causes the policy to become very expensive over time. In terms of permanent insurance, whole life is your best bet. As an estate attorney, most of my clients need a large term policy with the option to convert and a smaller whole life policy. Pennsylvania, like a few other states, has an inheritance tax. So life insurance covers the tax without liquidating assets. So Courtney brought something to bear to that as well. Me and Courtney, our team, Black Wealth Project, so I wanted to shout that out because it was good commentary. It was good commentary. Now, to be fair to Trap, because I don't want this to be the dump on Trap show, because that's not fair. He's not here to represent himself, right? But I'll say this. Trap has kind of mastered the algorithm. He knows what moves the needle. I also believe Trap is younger than us. So he looks at things from a different perspective than I believe Tank and I would look at it. Because we're looking at, yo, you're putting this out here and you're not necessarily being responsible or a good steward to share with everyone else. Because all they're going to see is this white guy with his, big muscles, Alex Hormozi, for the record. I'm not an Alex Hormozi hater. I'm actually a fan of Alex Hormozi. But all they see is this, and they see this guy saying, I've already talked enough about the white man's ice is colder, or that perception here, right? So when we have these type of dialogues on these public platforms, I know Tank is expecting a higher level of stewardship. But again, younger folks, and again, I'm assuming here, I just want to make that clear, say, hey, this is something to talk about. He's making some points here. This is valid. He's saying, I wrote the caption. To me and Tank know most people don't read the caption. He knows most people don't read the caption. That's why he said that. But I agree with his caption to a certain degree. But before we go too much further, what I want to do is I want to play the actual clip so people can see the clip. We can break it down. We can talk about it, the good, the bad, the ugly. And then we can really talk about what life insurance is about. And I talk about life insurance a lot, because there's a lot of deficiencies in the black community as regards to life insurance. And so, that's always going to be something. I don't sell life insurance anymore. There are still people who have bought policies from me who are still in place on the streets. So that tells you a lot. All right, but so let's put this up. Let's go through it. You all right over there, Tank?
I'm Gucci and gold, baby.
You ready to go? I see you. You ready to go. All right, so check this out, y'all.
Here's why you're probably going to get scammed into buying life insurance. Life insurance is one of the most profitable enterprises that exists. If you think about the oldest businesses that exist, they have to be the most profitable because they can weather depressions, wars, etc. And the oldest companies in America are insurance companies. They predate the tax code, which is why there are advantages to owning insurance, but they've structured it so you're not going to be the one benefiting from it. The reality is that you'll probably get scammed, you'll probably lose all your money. Most of those products, 80% of them get abandoned before they come to fruition, which means that you forfeit all of the money that you gave them. Most of it, the first year especially, is going to the sales guy who sold you. The second thing, 80% of those get forfeited before they even break even. And they know that and they factor that in to how they make money. If you want to pursue whole life insurance, honestly, the likelihood that you get scammed is just almost 100%, and I can't recommend it.
Whew. Have microphone, will talk trash. Like that's the great thing about the internet, man. Is so many views that can be expressed, even those that are completely insane. I gotta say a couple of things.
Get it.
The thing that bothers me most is if you see somebody come. I gotta tell a story. I'll be brief with the story. I just saw it on the internet 3 or 4 months ago, and I've added it to my permanent repertoire of storytelling. A donkey and a tiger are in a field, and the donkey is telling the tiger that the grass is blue. He's saying the grass is blue, the grass is blue, the grass is blue. And the tiger's like, are you crazy? The grass is clearly green. He said, no, the grass is blue, the grass is blue. And the lion is the king of the jungle. So the donkey says, let's go ask the lion. Goes to the lion and he says, hey, sire, isn't the grass blue? And the tiger says, don't answer him. He's clearly a fool. You know the grass is green. And the lion says, tiger, you are silenced for 30 days. And the donkey runs off saying, I was right. The grass is blue. The grass is blue. The tiger turns to the lion and he asks him, he says, why would you silence me? We both know the grass is green. He said, of course we know the grass is green. Only a fool would think it's blue. So you were arguing with a fool. But more importantly, you wasted my time coming to me with this nonsense. So I'm punishing you. When we see somebody on the internet that says something that is just completely crazy and wrong and has no factual basis, it jumps off as obvious to us that we shouldn't listen to it. You don't need me or Kamari or anybody else to come help you know not to listen to it. You can hear its foolishness. But when you see people get on, as that saying goes, I know enough to be dangerous. When you see people get on there and spit some pseudo facts, mix it with falsity, and appear to be knowledgeable, those truly dangerous people. And that's what I see from this. For the record, I'll do better than his 80% number. As a person who sold life insurance, 97 point some, I don't think it changes, it fluctuates, but over 97% of term life insurance policies that are sold expire without a death benefit ever being paid. That's
That's a
almost
fact.
100%.
That's a
And
fact.
you would say to yourself, well, then damn, why are we buying this stuff? Well, let me
I think Tank's got some technology issues. He's
explain
freezing on us.
why you should first form insurance.
Tank, you're breaking up on us. You're frozen.
With me on that,
I think
okay,
there we go.
uh, okay, I apologize.
Frozen again.
When people buy term, it might take a
No,
second.
you're good
Give me a
now. You're
second.
good. You're
Okay,
good.
when people buy term life insurance, they are actually not buying it to ever have anybody get paid. Nine, the vast majority of people who buy term life insurance are buying it as catastrophe insurance. You buy term life insurance when you're young, when the actuarial charts say you will most likely not die. When you start out on your financial journey with your young family, with your new mortgage, and you just want to make sure that if you get some stage 4 cancer or drive through Philly too late at night and get shot, whatever the case may be, that your family will get a check if you are unable to make it to the finish line that you and your planner are setting out for you. You're buying just in case insurance, like Chris Rock said. You're paying for the peace of mind that knows if something happens to me, my family will be okay. You're not paying for the death benefit. The last thing you want is the death benefit. It's like it would be tantamount to you saying you buy homeowners insurance and hope your home gets burnt down. Nobody does that. You buy homeowners insurance in case your home gets burnt down. And with life insurance, especially term insurance, when you buy term life insurance, you're normally quoted a number of years that it will be in place: a 10-year term policy, a 20-year term policy, a 30-year term policy. What people don't understand is that the life insurance will go on forever. What that term you were described has the number in front of it is the amount of time that the premium is guaranteed to stay the same. So if you buy a 20-year life insurance policy and somebody tells you the premium is $100 a month, God and the insurance company are promising you that that premium is $100 a month for 20 years. What most people don't know is that 20 years and a day, that policy is still yours. That $100 price you were promised now is going to go through the roof. Now it's going to turn into like $3,800 a month. You're going to say, I'm not paying that. And you're going to do what every logical person should do. You're going to rip it up. Unless you came down with stage 4 cancer last year, then you're going to do everything in your power to continue paying it because you know it's going to pay out soon, unfortunately. But most people, as they approach the end of that term, they just get a new policy at a reasonable price. So when I say that 97% of term policies never pay a death benefit, that's your explanation why. That the vast majority of them get to the end of the term, they're still in effect, and the person chooses to not keep paying it.
But to be fair
Very,
to Alex, I don't know if he was speaking specifically about term. I
I don't
think
think he
he just made
was.
it. I think he just made a blanket statement that all life insurance, 80% of it, gets canceled, and
I don't
in
think
between every type of life insurance. And I
I
was wondering about that.
Yeah, so I don't think he was, but here's the problem I have. So I do know also there are whole life policies that people get to year 3 or 4 and they can't continue paying the premium and they lapse. But when you get to use 80%, here's where the mathematician gets triggered. He took the big 97% number that happens naturally in insurance, meshed it together with the data on permanent insurance, and can use a big number now like 80% and actually not be lying. but it's very misleading. It's very misleading. It's taking the preponderance of insurance that should go unpaid and adding it to the stuff that does actually lapse for reasons like you were oversold insurance. There are some people who walk out of a meeting with a life insurance agent and they have a $350 monthly premium on a $200,000 whole life policy, and they shouldn't even have that policy. They're struggling to make that premium, and 14 months in, they realize they can't anymore, and they let the policy lapse. There are
Facts.
circumstances where that happens.
There's a lot of circumstances that like that happen, sadly.
Right.
And so that's why I want to, and I want to replay the clip again because I want everybody to get it. I see there's some new people joining. Thank you for everybody that's here. But there are a lot of shenanigans in financial services across the board. There are a lot of shenanigans in life insurance specifically. One of the reasons why I don't have a life insurance license anymore is because I hate those shenanigans. But for the record, I will still say 10 toes down that life insurance is probably the best financial innovation ever. I'll argue that all day long because it's the only thing you can put a dollar on today and get $1 million tomorrow. It's the only thing that can really protect your family's income. If I don't get home tonight to my family and I ain't got to worry about them not having no money, I ain't got to worry about my wife tricking off and trying to marry somebody to pay the light bill. Let's not act like that doesn't happen, folks, because that's a real thing. A lot of times the ladies would marry for stability. I get it. I totally get it. I have a daughter. I don't want her to start thinking about craziness to try to get some money because she's destitute or potentially homeless, right? So I'm a big life insurance advocate. I'm a big life insurance advocate for the black community as well. But he did make some good points. Now, Tank, you kind of jumped all over them and you jumped right to the numbers. You jumped right to the numbers.
Because I'm a numbers guy, and
And
the
I'm not mad at
reality,
that.
the reality is this, and we talk about this. Like your line is life insurance. Excuse me. Your line is personal finance is personal.
For the
My
record, that's not my line. I
well,
picked it up somewhere along the way.
but I heard you say it, so it's your line to me. From now it's your line, and my mind is your line. And my line is there are no such things as bad financial products. There are only bad financial marriages. That's what I believe.
Right.
So the reality is this: life insurance was created. Let's go back to the history of life insurance. Life insurance was created for widows and orphans, which is why the IRS tax code protects its death benefit and makes it tax free to receive. Because, go ahead,
Oh,
I'm sorry.
but wait a minute. He said something.
He said it predates the tax code.
I would agree with that.
You would agree that it predates the tax code?
Yes.
I do know it
In
predates the tax code.
in this country.
Yeah, I do know it predates the tax code because New York Life used to insure slaves, enslaved Africans, and that was before we even had a tax code. So,
Damn you, Tank. You took my thunder. I was going to say that.
I apologize.
That's why you my man.
It's
But
the
yes,
history. It's the history
that's
of that
true.
company and this country altogether. It's just ugly. Our history here sometimes.
And it's not just New York Life. There's a lot of other life insurance companies that absolutely enslaved our ancestors when they came over from Africa. So
Yes. So
that's a reality.
it does. My point still would be is that the tax code put the blanket of freedom around life insurance and said, hey, here's a product that is earmarked to help the most vulnerable of our society, women and children who have lost the breadwinner. And we want to put them in the best position possible when they get this money so we will not burden them with taxation. Now, here's the thing. That's it. That's it. That's what life insurance was invented for. But there is not a thing that goes into the IRS code that some smart, creative, well-meaning, looking for a loophole person doesn't look at and say, hmm, how can I make this work better for me? And normally, these are the wealthier people. So instead of saying, hey, that's great that they're looking out for the destitute women and children who lost the breadwinner in their household, I heard tax free. I want to do something with that. And they start to mutate products and processes to better serve them. But now this is where I'm going to use the personal finances, personal part. When they did that, It was because for them, that made a whole lot of sense. They had a bunch of money they were trying to protect. Doing this made sense. Then
Facts.
you go to the shysters, and the shysters say, "I just heard that Rockefeller did this, Vanderbilt did this,
I'll take we losing you again.
J.P. Morgan
I don't think the internet
this
guys
money."
want this
And
good information out there.
am I frozen again?
No, you're good now. I don't know what
Can
you
you hear
did,
me?
man.
Okay.
You must you spitting
Yeah, I don't know.
fire.
I did a whole broadcast. I did a whole broadcast earlier and didn't stutter once. But okay, I apologize.
Well,
So
you didn't
this
stutter. To be
person,
clear, you didn't stutter. The
the
internet is
internet stuttered.
freezing on you. Yes.
Okay, I apologize. So they saw these wealthy people do this, and just like we see on the internet now, I hate me and Kamari both shudder when we hear the first words be, "This is what rich people do." But back in the day, somebody went and said, "Hey, working class guy, didn't you just hear that J.P. Morgan was able to never pay taxes because he got this policy and he did this and he did this? If it worked for him, it should work for you." And then they manipulated and perverted something that someone else used for good to now use it for bad. That's why in sales we always say buyer beware, caveat emptora. You have to know that the person who has the most knowledge in a situation is normally going to walk away with the most money. And it's unfortunate because we should all be getting level handed, fair amounts of information, and we don't always get that. But what ends up happening is it takes one person to get burnt, one person to take advantage of. If you look on reviews for any company in America, you'll see more frustrated reviews for people who had a hard experience than glowing reviews for people who had a good one. Because it's our nature. We expect good. When you go to a restaurant, you expect your steak to be cooked the temperature you ordered it to be brought to your table in a timely fashion, and for your car to be out front when you call the valet. You expect that. So when that happens, you're not going to go home and write a great report about it. That was what was supposed to happen. But let your car not be out there. Let your steak be burnt. Let it take 40 minutes to get to your table. Oh, you writing about that. And that's what
Absolutely.
happens in sales. You have one bad experience, and life insurance is the devil. Annuities are the devil. Whatever the case may be, because you got burnt. And when I see this guy, Alex, talking that you're
Hormozi.
more, so more likely than not to lose your money, it just to me, it makes fear the leading entity instead of education. And we have to educate people.
But education doesn't work. Education doesn't make people move. Fear makes people move. That's why they always say life insurance has to be sold. And to a large degree, that is true. I hate to admit that. I hate to say that, but it's true.
You're
Because your average
100%.
cat, the average cat, let's say they make $50,000 a year, your average income. They like to go get their six-pack of beer every week when they get paid. They're not thinking about what's going to happen if they don't make it home that night. If they lose the race with the railroad. If
That,
they can't get it, and then you see these people that are destitute. And it's sad. But I do want to go back, right? He also said some other things. That, and we're going to play the clip again. But he also said something that we can't negate. Life insurance salesmen. Well, let's talk about life insurance. Life insurance absolutely weathers all recessions and depressions.
hmm
Financially strong. If y'all want a good education, the reason why Warren Buffett is one of the richest mans in the world is because of life insurance and insurance overall, because of something called float. And what's float? Cash. We could also call it opium, other people's money that he's able to invest with. But
Yep.
I don't want to go too far down a rabbit hole. Here's the thing. If we're looking at insurance, just the overall principle of insurance, let's say me, Tank, and 10 of our other friends, we get together and we say, you know what? If somebody passes away, they're going to be coming to our house asking for our sugar and milk. It makes sense for us to pool our money together and then indemnify, I hate to use that big word today, but protect the people who are vulnerable. And we know everybody's not going to die at the same time. But if we keep putting money in the pot and it gets some interest, we'll be able to protect those when they pass, just like Tom said. However, getting to the reality, the insurance salesmen, many of them, not all, do a lot of shady stuff.
Very
Do
shady.
a lot of ratchet, a lot of janky stuff.
Very janky, very shady.
And so when he said that in there, again, I would have to agree. I would have to agree.
I do insurance reviews. Now that I don't sell insurance, I feel very much neutral and can do insurance reviews. And can I shamelessly plug Wealth Our Way Network's
Of
YouTube
course you can.
page? Please follow my YouTube page. It's Wealth Our Way Network. Wealth Our Way Network on YouTube. We talk on our programs, the 15 Minutes of Finance and the Financial Power Hour, to which
Thanks a rapper to everybody.
to which Mr. Ellis has been a guest on both shows. We talk about the fact that you need to know why you're doing something. And if you have to pay somebody to do it, then you have to pay them to do it. So he touched on the fact that the first year in life insurance, most of the money goes to pay the person who sold it to you.
That's a
Truth.
fact.
It's facts. It's just what it is. Does it mean that it's a bad thing because somebody made money when they sold it to you? No, it doesn't. It doesn't. Like, go ahead. What's your point
It
on that?
doesn't mean it's a bad thing, but it will show where a person's motivations are.
Most
And I
definitely.
have seen one of the reasons why, again, I have a love-hate relationship with all financial services, especially the insurance industry. But like I said, I've worked at a pretty big place. I have seen guys go out, get a lead, say he's going to sell them a whole life policy, has no idea what their lead is, goes out and sells them, and fine because he has great salesman skills or salesmanship or sales skills. But he lacked human empathy.
Mm,
He lacked the humanity part of it.
right.
And that's the part I hate about it all around. But
And
that's human nature. Go ahead,
yeah,
then.
you got to find, and I blame the insurance companies for how they compensate agents. It doesn't always make the agent's interest line up with the clients that they're out seeing. When I walked into people's households who have two young children, and the mom is making 80 grand and the husband's making 70 grand, and they got a 30-year mortgage, and they pull out their life insurance for me to review, and they got $100,000 whole life policy with a premium of $204 a month. I want to find the agent that sold it to them and beat them in front of them, because this is a family that needs $1 million of insurance, and you're not going to get $1 million of whole life insurance. They need $1 million term policy to make sure that if mom and dad don't come home while they're paying off the mortgage and building the young child one and young child two future, that the nest egg money comes in. But you'll see the agent sell the policy that gets them the biggest commission, and they didn't do a job. And then I'll come in and explain what happened, and even though I can clear up and help them fix it, they've had a bad experience now, and they're going to be
Yep.
the people telling you, yeah, life insurance, I don't know about that life insurance, oh my god. But it's one of the most beautiful things. I helped the person my last year at New York Life. I actually, it was funny, I was referred to a company where the CEO of the company wanted to buy a life insurance policy for deferred compensation for his CFO, and we couldn't get the CFO insured. He wasn't healthy. Well, while we were doing it, the head of the board of directors told the CEO he needed one of these policies. So God was good to me because I went in to sell a policy that I was told wasn't going to happen, and turned around and was able to sell it to the CEO. CEO ran 8 miles a day, no exaggeration. One of the healthiest people you will ever meet. I got a call 3 years ago. I'm sorry, it's 2022. 2 years ago, right in the middle of COVID, CEO caught COVID and died. So I was so sad because it was a nice guy, but so pleased that when I'm on the phone with his daughter, that I could tell him, well, your dad didn't even buy this insurance for insurance purposes. This
Right.
was this was retirement money, which is something we're not gonna get into on this show, I don't think. But it happened to have a death benefit of $780,000. And this little girl, well, she was 20 something. So this young lady was about to get three-quarters of $1 million. And New York Life lost on that policy because he literally paid the premiums for 7 months and then passed away. So, actuaries hate when that happens, but that's the power of pooling. I want to go back and touch on something you said, Kamari, about
Hold on real quick. I don't want to leave the people hanging. What Tank's talking about, it is a way of saving for retirement, but the company will pay a policy for an executive and they will dump extra money into it. And it's a great way to save. So when you see people talking about using insurance as investments, which I don't really like, but for this conversation, using it for investments and savings, there are ways to do it. But that technique usually works for big corporations, and everything ain't for
everybody. Personal
Right.
finance is personal.
Right.
I want to
So
go back to
Tank.
what you said about the float. Here's the thing about insurance companies. Now, forgive the one outlier to this example, which was AIG when they tried to take the whole damn world down in 2008. Forgive that one. That immediately when I tell you this factual story, that's the first thing somebody will be over in the corner saying, "Well, it's not always true. Look what AIG did."
Absolutely.
But for the most part, insurance companies do what I preach every day to my clientele and my audience to do: to have principles, have a budget, and invest in things prudently. Insurance companies buy 30-year treasuries. They buy some of the safest, lowest risk investments out in their general account. They take money from you, they hold that money in their general account, which has a bunch of investments, and as people pass away, they pay out of it. They know for a fact that they're going to make X percent, and they know their costs are going to be Y percent, and they live off the difference. So, to Mr. Hermosa's point about them being profitable through recessions and depressions, you know why? It's because they are in their lab trying to hit single after single after single. You go to a New York Life or a Northwestern Mutual or a Mass Mutual and ask them to buy into a startup cannabis company, and they will throw you out of their office. They don't do speculative investing. They
Not at
buy
all.
the safe stuff, except for AIG when they did all the mortgage swaps and tried to destroy the world. But most of them are in their general account buying the safest of stuff. The stuff that my audience tells me, that's so boring, Tank. The stuff that makes Warren Buffett get on the internet and say, nobody wants to get rich slowly, because they don't. Insurance companies want to get rich slowly. They have the recipe. They're doing boring investment over and over and over again. You
Say
can't
it
get
again.
mad at
Say it
them.
again.
They're
Say it
doing
again.
boring investment over and over and over again using your money. They're not hustling you. They're taking a dollar of your money. They know the cost of the insurance is 78 cents. And they're using the other 22 cents to invest in stuff they know works. That's all they're doing. Slowly over and over and over again for 175 years. It's like
And it,
water hitting a rock. Erosion eventually happens.
and and I'm going to do an episode on this at some point because I see a lot of people talking about cash is trash. But just the mere fact of insurance companies having boatloads of cash is the way that they're able to invest and survive, like you said, year after year, decade after decade, generation after generation. What's 100 years? Century after
Century.
century.
Yep.
Because there are insurance companies that have been around for quite some time, and they're fine. Some of them, some of them
And
get in trouble.
it's
But
not in trouble.
let's not get too far back because
Yep.
I wanna talk about the points that he talked about. So real quick, let's show the clip again. Let's show the clip again. Excuse me for getting tongue tied.
Here's why you're probably going to get scammed into buying life insurance. Life insurance is one of the most profitable enterprises that exists. If you think about the oldest businesses that exist, they have to be the most profitable because they can weather depressions, wars, etc. And the oldest companies in America are insurance companies. They predate the tax code, which is why there are advantages to owning insurance, but they've structured it so you're not going to be the one benefiting from it. The reality is that you'll probably get scammed, you'll probably lose all your money. Most of those products, 80% of them get abandoned before they come to fruition, which means that you forfeit all of the money that you gave them. Most of it, the first year especially, is going to the sales guy who sold you. The second thing, 80% of those get forfeited before they even break even. And they know that and they factor that in to how they make money. If you want to pursue whole life insurance, honestly, the likelihood that you get scammed is just almost 100%, and I can't recommend it.
All right, I want to talk about number 2 real quick. Right? When he says most of the money's going to be forfeited. But we know that's not the point of insurance, any insurance. For that matter, I'd always love when people say, I got this auto insurance, but I've never been in an accident. But what happens tomorrow if you go out and you get hit by a tractor trailer and you don't have insurance? You really want to wish you had insurance. I can't tell you, and I'm sure this has happened to you, Tank, how many times people have called me from the hospital and said, I have a family member who's not going to make it. They don't have any insurance. Any life insurance, that is. Can you write them a policy? No.
No. No. I'm sorry.
Now,
No.
again, life insurance, again, I'm not trying to be, disingenuous or anything like that. Life insurance monies are here to make money. One ought to be clear of that. But if you understand how the product works and you have a strategy, you'll understand how to plug in life insurance or whatever product it is that you use. Problem is, most people don't have a strategy. Alex Hormozi also, I believe, he doesn't have any children. And so, anytime there's a saying out there, never trust what an author says until you know the history of the author. Something like that. So he doesn't have any children. Again, this is no shade to Alex. But when we see people consuming this, making bad decisions based off of this information, it gets all of our goose. It makes all of us a little hot under the collar. So, again, it behooves all of yous, to really take some time and understand real financial education. Good thing.
For years, Susie Orman
Okay.
would come on TV, on her show, on the radio, and talk about how long-term care insurance,
Why are you bringing her up?
long-term care insurance was the worst thing in the world. You're a fool if you get it, blah, blah, blah.
Until she has to pay
Until
the average.
until she applied for it because she knew she needed it and was turned down because she had a condition that made her, and they Google it. So this is a person out here getting paid hundreds of thousands to millions of dollars to give advice. People are hanging on her every word. She's talking about something being horrible. And in the end, she applied for it because she knew it was good for her at that point in time, given her situation. And at that point, she had wasted too much of her youth to get it. Number two, I found this out to be a true statement. Dave Ramsey, the male Susie Orman, talks about whole life insurance being a scam. Very similar pitch that that guy Alex Hermoso's giving. Well, I worked at New York Life. Guess who sold New York Life whole life insurance leads? Dave Ramsey. So he's telling the general public, don't ever buy this. And
Is
he's
that an
turning around and
exclusive?
profiting by selling leads. When you call into Dave Ramsey and say, well, I wanted to get some whole life, but you just said it was horrible. He says, yeah, it's not a good idea. Here in New York Life, this guy just said he wants a whole life insurance. He's probably an easy sale for you. 30
Talk
cents.
about disingenuous.
Hypocrisy. You got to watch these talking heads and what their motivation is and what their profit is. You have shows like Kamari's, you have shows like mine. You even have Wall Street Trapper. I applaud Trap for doing what he does. Like, we want to raise the awareness and the consciousness of people. I walked into a barbershop once, slightly off topic, but I'll pull it back in. Walked into a barbershop once to get my hair cut, and
You know
normally
I'm jealous, right?
because that's not something you do regularly.
That's cool.
You
That's
get your beard shaped up though.
I
So I
do.
walk in there, and normally ESPN is on, and we're talking about sports. It happened to be a day. This is not too long ago, because when I say what happened, you may remember the event. The talk of the barbershop was Nas coming out with this NFT. I was say NFT. This NFT that had like broke all the servers and people couldn't buy it because so many people wanted it that day. And
Non-fungible token.
non-fungible token. And to hear 7 black people in a barbershop start talking about Nas and NFTs and then move to cryptocurrency in general. And then my barber said, well, Big Tank knows money. And then I start talking about treasury yields and stuff. It was the most beautiful thing for a fat nerd like myself to appreciate that day. Like, we're not in here talking about who got the biggest booty or who can dunk the best or somebody's contract. We're talking about real finance now. That's what's happening in our neighborhoods. And I love it. The problem is when we don't have enough literacy to then know what we're talking about, we get in trouble.
I would agree. I would agree. I actually hate the term financial literacy, but that's a whole other conversation. But I would agree. We don't have enough education around it. And we have a lot of people who have done some things that have worked for them and they feel like they can give advice
Oh yeah.
without understanding the dark side of things. And so, I get declared a new hater every 6 months. In 2017, when Bitcoin crashed, I was the Bitcoin hater because I told people not to invest their savings in Bitcoin, and then it crashed. Right? I've been called the real estate hater because I tell people not to invest in real estate without getting an education. Right? Some people just say everybody should buy real estate. No, 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 no. No, you shouldn't. No. Get an education first before anything that you do. It's like, would you marry somebody that you don't know who their mama is? Under normal circumstances, you would not. And it's just about doing that research. It's about, if you want to buy a car, would you like to see some of the maintenance receipts?
The Carfax.
A used car, that is, right? Carfax. You want to do your due diligence. A lot of folks don't want to do that. And it's really, really sad. Because again, Tank says there's no such thing as bad financial products, there's only bad financial marriages. I say there's no such thing as bad financial tools, there's only bad financial strategies. Same thing, we on the same tree. We both agree. Because if you don't understand the product and what it's supposed to do, yeah, it's gonna look bad. Now
Only bad for you.
I don't wanna negate this. Because life insurance in the bad community does have a bad rep. Largely because, and there was some abuse there, when we had what's called the old debit routes, when the folks would go door to door and they would sell policies and it'll be a nickel a week. And then come to find out 5 years, 10 years later, grandma, nana, and papa had a life insurance policy for like $500. Doesn't even cover the burial. Doesn't do any of that. Those days are over now. It did happen. It's left a major stain on our community from an industry, from a systemic issue. So again, Hormozi kind of sounds like he's one of the old folks and say life insurance is a scam. Them folks came around every week and collected 50 cents from my grandmother, and when it came time to pay, they ain't pay, or it only paid a little bit. But there's also how much benefit did she get?
Right.
Goes in that. Go ahead, Tank.
I had a client who's a term insurance owner, very, very wealthy person. Net worth was over $8 million. And I was telling him he needed some permanent insurance. We needed some tax planning and some strategies. And he's like, dude, I love you. You're one of the smartest guys I know. I trust you. I don't believe in whole life insurance, and there's nothing you can do to make me believe otherwise. And we used to battle and battle and battle. I normally don't battle with people. Hey, you don't like it? We'll go a different direction. It's cool.
Right.
But with him, he was a friend. I was like, you need this. Like, you are tripping. And he wouldn't budge. And more and more conversation, it came down to a story of an old situation, like you're saying. His great-great-grandmother had been, swindled out of money with the door-to-door insurance salesman. And his grandfather, who was his mentor, like a person he loved and looked up to the most, told him,
Right.
you promised me you'll never buy any permanent life insurance. And so literally Beyonce and Jay-Z could come to him and promise him lap dances if he bought the policy. He's not buying it. Like, there's nothing that could happen that would make him get this policy. And once I knew that emotional connection to it, and you touched on that earlier, so I want to say something about that, because we're trained as salespeople to realize that life insurance is very boring. You want to lose friends and get people not to speak to you? Wear a shirt that says I sell life insurance. Like, lead with that in the meeting. Hey, I'm a life insurance salesman. I always tell people I don't like to be around people. This internet stuff is great for me because I can talk to thousands and not be anywhere near them. But if you want to really have a fragrance to wear that will repel people, tell them you sell life insurance immediately upon meeting them. Say it just like that.
Facts.
The reality is that life insurance is not a lovable, warm and fuzzy, interesting topic that we want to talk about or that we want to buy. And
Unless you got $1 million check
that you got $1 million check,
from
and
somebody passing.
they
saved your
know
life.
that at the life insurance company, so they teach you don't walk up to people and sell them life insurance. walk up to people and sell them taking care of little Johnny. Walk up there and tell them that you don't want their wife to be married to the dude down the street or to have to move into a new school district with your kids. Make it personal.
Pull
Don't
on their
try to sell this
heartstrings,
product. Play on the heartstrings. Make it
pull on
personal.
their emotions.
It's not a sham to do it. Sometimes you do have to trick people into doing what's best for them. It's a law. Not if you don't have
Right,
auto insurance, you go to jail. They had to
right.
make it a law to make people do it because we need auto insurance. We got to have it. People don't necessarily want to do what's best for them. The reality is, and you said something about this earlier about how hard it is for people to think about the future. That is not, if you're struggling with that, know that that's not a problem just for you. It is actually encoded in our DNA to be more concerned with today than tomorrow. I don't care how long we've been walking upright, the actual way the human brain thinks has not changed that much over the 100 billion years that we've seen fossils or whatever.
The lizard
And
brain.
and the reality is that when a saber-toothed tiger could come into your village and eat everybody, or a warring faction could come into your village and kill everybody, you had to be concerned about what you did today to survive. You
So
didn't
it was
think
fight or
about
flight.
it was fight or flight.
It was fight or flight.
So now we're living a lot longer. Now we don't just have saber-toothed tigers coming into our villages and things of that nature. We have fences, we have guns, we have all kinds of stuff. Now we have to plan for the future. But it goes against our hard wiring to think about our 80-year-old self with the same passion and enjoyment we think about our 40-year-old today self with. It does go against our human psychology.
All right, and I see some of the comments there. I'm going to get to y'all. Real quick, real quick. I want to let you know the Finance Rebel is making some changes, right? We just created the Finance Rebel Show podcast channel on YouTube. So this show will no longer be shown on the regular Finance Rebel channel. It will be starting, not next week, we got the next. It'll be on the Finance Rebel Show podcast channel. So do me a favor, go and like it, go and subscribe, and you'll love a lot of the stuff over there. I promise, promise. All right, but Tank, this is what I want to do. Let's really break down life insurance.
Yes.
All right, and so let's start from the top. I'm going to give you a topic, then I'll take it. You give your response to my question, and then I'll give it.
Perfect.
What is life insurance for?
Life insurance is for the continuing of a financial plan that gets interrupted due to an unforeseen occurrence.
Okay. My response is life insurance is to replace the income of people that were taking care of a family, just in case someone were to pass. Tank, what are the different types of life insurance?
The big major two categories are term insurance and permanent insurance. Underneath of those major categories are subcategories. You have yearly convertible term, you have level term, you have refundable term. Under the permanent side, you have universal life and you have whole life. Under universal life, you have indexed universal life, guaranteed universal life, variable universal life. Underneath whole life, you have custom whole life, or what is known as limited pay whole life. And you now have a product called value whole life.
All
All
right,
value
so
whole life is, just so we're clear, is normally whole life is figured on a chassis of you dying at age 100. Value whole life takes that age out to 121. And because it stretches that actuarial chart, the actual premium is now reduced because you're forecasting living 21 years longer. It gives you longer time to pay for the insurance, allows the premium to be reduced at a value.
and before I give my answer, actuarial, right? These actuaries, big brain people who are great at numbers, are figuring out how long you're going to live, how long you have till you die or till you get sick, and that's how they base much of the life insurance premiums off of. So
Yes.
just, I don't want to lose anybody here. But I kind of explain life insurance the same way. I say there's basically four kinds of life insurance, right? At one end you have term, at the other end you have whole life. Term being the cheapest, whole life being the most expensive. Term is like the Ford, whole life is like the Cadillac or the Mercedes Benz, whichever your flavor is. The premiums for term again, are lower. As Tank explained earlier, term only lasts for a certain period of time. It doesn't last forever. 5-year term, 10-year term. At the end of that 10-year term, the prices tend to go up triple, quadruple, sometimes 10 times the amount. It will all depend on, and I don't want to get too technical, but the premium amounts all depend on the overall cost of insurance and how many people are dying in the pool that the life insurance company is insuring. So just keep that in mind. Keep that in mind. A lot of times, since people are living longer, life insurance cost is going down over the years.
Yes.
But every situation is different, right? So that's term. Again, at the other end, you got whole life. Guaranteed. Doesn't expire as long as you pay your premiums. As long as you pay your premiums. If you don't pay your premiums, it doesn't work. I know a lot of people are talking about being the bank. They're talking about using a whole life policy that pays great dividends that they can use to build cash value, and then you can borrow from it. One of the things you got to be aware of is that if you take too much cash out of your policy, out of your life insurance policy, and you're not paying the premium, that premium might blow up. And guess what? If you got a loan outstanding, it becomes a taxable event. So you got to think about that. There's so much nuance to this stuff. Keep it going. You got to go really, really deep, y'all. All right, last two other points. They're both permanent insurance, VUL, Variable Universal Life. Permanent life insurance, you take part of your life insurance premium, you invest it in the stock market. IUL, Index Universal Life, you take part of your life insurance premium and usually invest it in some kind of interest rate bonds with the insurance company, right? So I want to ask these questions with Tank because I want y'all to hear it from two different ways, right? So you can kind of get the full flavor of it. We're kind of still saying the same thing, but we're expressing it in a bit of a different fashion. So whether you like Tank stories, whether you like my brevity and get to it, you can get it either way. Tank, what are some of the most success stories you've seen with life insurance? I know you gave us one.
So one of the biggest things that they taught us at New York Life when I first joined them in 2013 for my 6-year stint were some of the success stories. So most people don't know this, but Walt Disney founded Walt Disney using the cash value of his life insurance policy. J.C. Penney, same thing. The gentleman who did Woolworths, same thing. Success
McDonald's.
McDonald's success story. Charles Tank Harris. I pay a considerable amount in insurance premiums every month. I believe in the product from when I used to sell it and in continuum. All of my children and I want to talk about juvenile policies. All of my children have whole life cash value policies. I have one on my ex-wife and I have one on my current wife, and I pay into these policies. Yes, I do. I'm not going to kill anybody, but
You, you,
I pay
you
into these
just set me up for
policies.
mad jokes, but go ahead. I don't want to ruin the moment.
And the reality is that you see these people and they make my skin crawl sometimes when they promote borrowing from policies and things of that nature. I can borrow from my policies. I've been paying into them for the better part of 7, 8, 9 years. And let me tell you, let me give you the numbers, not to brag, it's to shed light on this. My collective insurance premiums every month are $2,600. From every policy I pay, all in total, $2,600. That's what I pay in insurance premiums, life insurance premiums, every month. So when I see an opportunity to invest in something, I had something come up 2 months ago. Very, very good opportunity. All my cash that I budget to go into investments was all budgeted, all in various investments. I didn't want to take the cash from anywhere, but I wanted to get into this investment. Went off like a light bulb. I had $42,000 in cash value amongst my 11 policies. I filled out a form with New York Life, sent it in on a Sunday night. Sunday night, I uploaded this form. Tuesday morning, the $42,000 was in my bank account. No application, no credit check, no anything. Borrowing from myself. Was able to put the money to work in the investment, did some things, and started paying back the money to New York Life. So that's a success story because people don't realize that the functionality of what you do has to be more than just making money. There are opportunity costs to every dollar we put somewhere. So when we have the ability to take money out, no muss, no fuss, that's an advantage to someone like myself. Now, I tell you that story. For someone else, it could have been the worst idea in the world for them to do that. If you're making $35,000 a year, let me take it up. You're making $75,000 a year, and you have 2,600 bucks a month going into insurance premiums. Please introduce me to the person who did that to you, because they touched you wrong, and I need to help you.
You need
Like,
five
please,
minutes. You
please
need five
introduce me.
minutes.
I just need 5 minutes alone with them. But I make substantially more than that, and for me, it's appropriate. So we all need to do what's appropriate.
Right. So I want to somebody remind us. We definitely want to talk about juvenile policies, right? But I'll say this: my most successful story wasn't even a story about me. Well, not directly. It wasn't about a policy that someone brought from me. It was about a childhood friend who brought a policy from the agency I was with before I was even in the mix. She got brain cancer and she had some children. And I hadn't seen her in quite some many, many years. And the first thought, again, because when you work with life insurance and you see these things happen, you see somebody die, the first thing we think about is, dang, I hope that person had life insurance. We can't help it because we see both sides of it. But when I found out that her husband and her children were going to get a nice penny, 7 figures, that they would be able to take care of the families, be able to live okay, can never replace mom, right? Can never replace that loved one. But when I heard that, I shed a tear because I was really, really happy. I was sad that my friend had passed and I didn't get to see them. But it also made me happy at the same time that they're going to be all right. Or at least financially, they're going to be all right.
My best,
And we need more stories like that.
yeah, my best life insurance policy story is the opposite. It's not a success story. It's not a happy story. So Big Tank has a huge ego, and I don't like being. I don't. I've been in sales for 27 years. It's remarkable because I hate being told no. I hate rejection. It makes me look at you very poorly if you tell me no. I resemble the Kanye West line. Your girl doesn't like me. How long has she been gay? Like, who's not buying from me? What is wrong with you? And it frustrates me when I used to sell. So when I got into insurance, I didn't sell to anybody basically that I knew. I didn't call any of my friends. I didn't call my people from Temple. I didn't call people because I didn't want them saying, like, Tank out here hawking, life insurance like his daughter's Girl Scout cookies. Like, my ego wouldn't allow me to do it. I'm going after, CEOs of companies and professional athletes and high net big ticket items. I'm not selling insurance to protect anybody I know or any of my friends. So we talked about this being Life Insurance Awareness Month in September. It was September. It was Life Insurance Awareness Month. I saw on Facebook a GoFundMe page for a person who you couldn't tell me didn't have their money together. I just saw that person in the summer at their big old house. They had motorcycles, they had cars, they were doing great business with high net worth people, and they had a little business tragedy. And we talked about how they were getting their capital together for it, and they had the capital. And then I see on Facebook the person's child setting up a GoFundMe page because the person was dead broke and didn't have enough money to pay for their funeral. And I felt horrible. I sat there in this man's house chopping it up with him. Never thought to ask him, was he good? Are you straight? You got some insurance? You straight? Because I got too much of an ego for him to say, nah, Big Tank, I'm good. Like, I don't like hearing that from nobody, so I don't ask. And his child is on here. They're selling this man's motorcycles, selling cars to pay bills and debts. Well, the next month was the most successful from a volume of policy sold in my history at New York Life. In 30 days that the month had, 31 is October, I sold 47 policies because I called people up and literally threatened them. If I knew they had kids, I said, here's the deal. You have children, you don't have life insurance, you don't buy on this call, delete my phone number, take me off Facebook. I don't rock with you no more. You're a bad human being. That was my sales pitch. And I sold 47 policies. And I tell you what, it was the least profitable month of my business because the 47 policies I sold on average, they were almost all term policies. They almost all had a face amount somewhere between $400 and $750. The premiums were $30 a month, $60 a month, $40 a month. I wasn't making no money, but I insured 40 some of my friends that month, and I never felt more accomplished in the business because now I could look their kids in the eye when I went to the cookout. Now I could look their mom in the eyes when I went to, the church with them. I felt good about what I did. It didn't get me paid in the next month because it was before Christmas. I had to go back to selling big policies to make this money. But I did what I should be doing. I protected my people, my community, my friends. And that's the beauty of life insurance. Yes, it's a sale. Yes, it's a product. Yes, somebody's making money, but you are helping people. When that young lady called me about her dad dying, who I would have never thought died, here I am, 500 pounds. This man runs 8 miles a day, drop dead. Would have never thought that would happen. But that check was coming, and he had bread. Like, it wasn't like she was hanging out for that check. They got houses. They got 4 houses across the country. But still, it was comforting that she knew that
Now,
money was coming.
real quick, for everybody that's just joining, right? Tank's not talking about his friend that had the GoFundMe. He's talking about another story that he talked
Yeah.
about in the beginning of the episode. Go back and watch it in the replay. It's very, very interesting. Now, juvenile policies. Let's talk
Juvenile
about
policies.
it.
So
Good,
here's
bad.
I love juvenile policies. Now, once again, our people like black. I'm not insuring my baby. I don't want my baby to die. If
And if
you
you
know
listen, and if
if
you
you
listen to that other person who shall name nameless that you named earlier, gives everybody a clue. She absolutely hates juvenile policies.
oh really? That's crazy. I love
Yes.
juvenile policies. So insurance is a discriminatory product. Not discriminatory the way we used to being discriminated against. It's discriminatory in two factors: health and age. The older you get and the less healthy you are, the more insurance costs. Who is healthier and who is younger than a baby? Unless the baby born with some disease. Who's younger and healthier? The cost of insurance for children is infinitesimally small, which
Yep.
means the vast majority of the premium goes into this savings bucket, the savings account. We used to do a policy for professional athletes called $1 Million Baby, where they would max out their ability to do the gift act. It was like 15,000 or 14,500 a year. They were put in this policy from the time the child was born to the time the child was 18. 14,500 went into this policy. They took out $50,000 a year for the kids' 4 years of college. They let the policy continue to grow. At age 30, they took out 150,000 for their first house. And then at age 65, they started taking out $3,000 a month for the next 25 years to supplement Social Security. That's how the policy was illustrated. And there was still $1,500,000 in death benefit for this person's grandchild that their child would leave on. So juvenile insurance is so helpful because of its functionality cost wise. But I'm going to take it a step further, especially for our community. Philly is horrible right now, but back when I was on my soapbox about this, it was Chicago. Chicago brothers just walking up, unfortunately, no value of life, shooting each other in the head over colors of shirts and other dumb stuff. And me and a bunch of brothers at New York Life were just hypothesizing one day of saying, how quickly would these mainstream companies' CEOs be in Chicago doing their own get the guns off the street campaign if every young brother in Chicago had $1 million life insurance policy on them? How quickly? Because money talks. So if you buy your child, godchild, nephew, cousin a policy when they're a baby, and now this 14-year-old, 17-year-old, 19-year-old is worth $800,000 dead, they know they have a value of their life. That conversation permeates throughout the community about the value of life. More importantly, though, these companies would start to realize, hey, we have to do something that hurting our bottom line if we see an uptick in young black lives being taken off the street because they're all insured. I
So
believe there will be a viral community effect.
I'm smirking over here because I'm ready to have a nerd moment with you. So, audience, bear with us for a minute. Just let me have a nerd moment, just real quick. I don't think it would matter, Tank.
No?
No. I'll tell you why. One, the effect, the pooling effect of insurance, the law of large numbers, and reinsurance.
Mm,
So some of those things are laid off. And again, I don't want to go down this pike with y'all, but we talking. I don't get to talk to big Tank that often. Um, for a lot of people, just to keep y'all engaged with the conversation, right? Life insurance oftentimes is a risk management, risk mitigation tool. But what life insurance does is they lay off their risk too. And so they'll find somebody else to take on their risk. And so they're kind of always super duper insulated and protected.
conservative.
They
Very
got
conservative.
insurance on their insurance, if I could put it, simply. So I don't know, because what I watch, and maybe I'm wrong, and maybe I'm just cynical as I get older in age. I see all these corporations pander about the community and wanting to help the black community, and some have done some good stuff. But if corporations really, really wanted to help, they would. They would do all kinds of things, and it wouldn't cost that much. It wouldn't take away from profits.
I
Guess
agree.
what? Diversity is a great ROI. That's been proven.
Very proven.
Very proven, right? So y'all just look up the ROI of diversity, right? People make money off of it. So if they really, really wanted to help make the playing field even, upset about the government and how they've been treating black folks, African descendants in this country, they would really do something about it. Now, some have. I don't want to take that away from them. I believe in being objective. But the large majority, I really don't think, give two hootenannies about black folks that look like you and I, and
I
our
don't think
children
they
and our
do. I
grandchildren.
think if it affected their bottom line, they would. And to your point about laying it off on captive reinsurers and things of that nature,
Yeah,
they have CEOs. Like at some point, somebody has to say, "Oh, we got all the black kids in Chicago on our books, and they're dying. We got help. We got to fix it."
they would
When
say, you know what? Let's reinsure all the kids that's in Chicago to some
yeah,
company in Macau or the Caymans or some other destination. But I can
yeah,
get on my soapbox on that one.
yeah, I think that when I look at insurance and I look at the tool of it, I look at, I tell my clients, hey, don't rely on any tool. As much of a great argument as I just made for juvenile insurance, I tell my clients that's not Lou Susie's money shouldn't all go in juvenile insurance. Let's put some in the 529 plan, some in the juvenile policy, some in the CD. There's various lanes. I just for in case the people who have joined us late, I am a financial planner. I don't sell a product. I make plans for my clients to reduce their debt, for grow their net worth, help them. If they have to do anything that writes a check or deals with money, they talk to me about it. And all of these tools are useful. They're all arrows in a quiver, and no arrow, in my opinion, is more potent or more sharp on its tip than another. They're all equally as important. I just love that you and I are able to, on a Wednesday night, with many people listening, talk about something that can help them and their families the way life insurance can. When I heard Alex bashing life insurance and saying you're more likely than not to lose money, it's ridiculous. I used to help clients take, once again, these are small business owners. So you have to be cognizant of the segment that you're talking about demographically. I have clients that are sitting with $700,000 in the bank, corporations, small business owners, $700,000 in the bank. And I go in there and I have a concept in my ebook called BUD. It's an acronym, best use of a dollar. I'm always telling
I
people,
thought we was gonna be talking about Mary Jane real quick. My bad. Sorry.
make the best use of a dollar. Make the best use of a dollar. Having 700 grand in your checking account is not the best use of a dollar. So tell me, let's go through your needs analysis of what money goes. Yep, go ahead.
Because that's not for his situation.
Right.
Yeah.
If you're sitting there in that situation, you're wasting the opportunity. Opportunity cost to gain more interest. So let's see what the bare minimum number that you cannot be without in your checking account. Oh, it's 250. Okay, now we have some use for the other 450. And I would show them like a 10 pay life insurance policy where they take 1/10 of the money every year. So we've now identified 450,000 that you don't need in the checking account. and I take $45,000 of it. It's a pretty nice ticket to write for me. $4,000 a month of premium now going into this 10-pay policy. And then what they would see is a side by side comparison is 10 years later, they now have the exact same amount of money that they would have had in the bank, plus the dividends that have paid from the life insurance policy. If while we were getting to the 10-year period, somebody tragically died, you'd have got a $2-3 million injection in cash. Now, from year 11 moving forward, you're earning an internal rate of return of 3.2% tax free, where in your checking account you were earning 15 basis points taxable. Big Tank did magic here. Now, did I not get paid $30,000 for doing it? Yes, I did. Don't I deserve it? Hell yeah, I did.
And that's why I can pay $2,600 a month for
Yeah, that's
all that premium.
I got done. But yo,
Can I borrow something? Can I hold
yes,
something?
sir. You know, you're always good for it. You know, I know you're good
Oh,
to pay
man.
it back. I know where you work.
What kind of interest you gonna charge me?
I'm at 17.8% right now.
That's what you gonna charge me?
Not you though. You
Jeez.
know, you getting it for the low. You getting it for
That,
15,
that that's
26.
more than prime right there. Jeez Louise. Oh man.
And you know, I got to get on the road tomorrow morning at 3:30, 4 o'clock to
Yeah.
go see the young fella play football tomorrow night down in Georgia. I'm in Jersey right now at my good friend's house. Even my friends are ballers. They, you know, got the nice little sitting room and everything for me to do the show. But I gotta get out of here. I so appreciate you having
Well,
me,
give
good
me
brother.
give me 3 more minutes,
Oh, of course, of course.
and of course I need you to be on the road safe,
Yes, sir.
because you know it can be dangerous out here. But
Out here sleeping in the
um,
bed.
I appreciate everybody. So Monica asked this question. I was wondering. I wasn't sure if it was in reference to what I said or what was going on. But she said, "Where was the education in all of this? Was that the video,
Yeah,
or what
she
we
was
were talking
asking
about
that about the
earlier?"
trap. She posted that right after you showed the video on Trap's page, and was
Gotcha.
asking about the education of all of that Trap was promoting with Alex.
Okay, Allison, you are correct. That free dad, what up? Thank you. Yes, hit the like button. Hit the like button, hit the share button, y'all. And don't forget to go on over and follow the new YouTube page, the Finance Rebel Show podcast. All right? Wealth Talk Productions. Salutes. Thank you, thank you, thank you. Shamiz, so she says, I agree on one thing that is guaranteed is everyone will die. Again, I agree, because one thing is guaranteed, everyone will die.
Everyone
I
will.
want to put this out there real quick as we go through these comments. I don't know if you knew my old boss, Steve Sanders, but Steve years ago said if everybody in the black community got $1 million on life insurance coverage, it would change the dynamics of wealth and our way of living overnight. What do you think about that?
I love it. And that's where I go. You know, maybe I'm too old and too chubby to afford $1 million whole life policy. I don't know what that premium looks like, but
Even though
each
it's
of
term though, right?
yeah,
Because it's
even term.
certain, right?
But it might not pay in term, but in whole life or universal life, it probably is the middle point. But each of my children, they do now. So like each of my children, my great grandchildren, who I may not be alive to ever meet, are going to be millionaires. I am assuring that with this $2,600 I pay. It is a small price. So I agree with Steve wholeheartedly, and had a chance to meet Steve, great man. You know, if we can get our community to understand what net worth is and how it increases by things like injections of capital from life insurance, we could close the racial wealth gap and undo all of this poverty that we see in our communities. You know, I would say very quickly, but very instrumentally, like very much on a trajectory that we could measure. We could see where our money is going. In 3 more years, I could do what's called popping my policy. Pop is the insurance industry loves acronyms. Everything's an acronym. POP is POP, premium offset payment. I will have enough cash value in my policies to never make my premium payments again. The dividends can pay them. Now, I can't do the loaning like I like to do because it's a one or the other. You either pay your premium or you take money out when you want. But
Right.
these policies are very useful if you know what you're doing. But if, like I
Facts.
said, if you're making 70 some $1,000s a year and you're paying 2,600 a month in insurance premiums, you're not going to like life insurance at all.
Gotcha. So now
It's
Tony
just
Z. Oh, go ahead, Tony. Go ahead.
no, no. I'm done. I'm done.
Okay.
Soapbox moments.
Tony, yeah, because you said you got to go to sleep, so I'm trying to get you out of here. Tony Z says annuities for sure is a tax shelter. So thank you for watching, Tony. Annuities are just a life insurance policy with another name. I'll say this though, they can be a tax shelter, but be very careful. I've seen people blow up annuities and they became tax nightmares. So there are no absolutes. It's all about whatever the strategy is. Definitely that. All right, audio, that was something when you were going in and out. Big Daddy still rocks 29. Big Daddy, I told you, I don't feel comfortable as a man calling another man Big Daddy. But it's all good. It's all good. All right, it says, when I used to sell insurance, there were agents that would sell auto, tell people they had to buy the life with it. One example of a lot of floating policies. Yeah, they lied to them. And that's sad and that's wrong. But
I'm just glad his name wasn't Delicious.
I ain't fit to be calling no grown man delicious. Debt-free dad, thank you again for that. All right, Tony Z said it was a blessing. Debt-free dad with a $2 super chat. Thank you, thank you, thank you. Now, insurance is a key pillar of generational wealth. It can be. Again, I told y'all, life insurance is one of my favorite things. But I think sometimes people get it confused because they don't have a strategy with it. They'll just talk about, oh, I got these policies. Don't know who the beneficiaries are. Don't know who the ownership is. And again, I've seen it get messed up. And again, me and Tank probably see more than the average, right? We see the good, we see the bad, and we see the real freaking ugly. So it can be rough. But thank you again for that super chat. All right, great. Yes, employee comp with life insurance can be great for employee retention, especially for the big boys. A lot of times they might partner those with what's called golden handcuffs. All right, I love that financial literacy talk too, and I'm seeing it spread amongst our community, and it's amazing, especially seeing these younger 40-year-olds interested in awesome too. I agree. Here's my thought though. While we're on paper getting more financially literate, I don't know if we are necessarily executing that literacy or that education. It's one thing to know something. It's one thing to be it and do it. And I just feel like if we really understand the power of our dollar, and that every time we spend a dollar, we are exercising our power, I think we would use it more responsibly. But I don't know. What do you think about that thing?
I definitely think that is one thing that, there's a saying, enough to be dangerous. If you don't have proper application, then having the knowledge isn't helpful.
Right. What's up, Tiffany? Thank you for joining. Jerry from Los Angeles. What side? How are you? All right. I think I got everybody.
Go down to Monica's. I want to answer that. 2 more.
This one.
So now where can we go?
Yeah, where can one go to obtain in-depth information about life insurance? I believe in educating myself to some degree prior to talking with the salesperson. I should know what the salesperson was talking about. Well, I have personally on this channel, I have a whole, Monica, you're on Facebook. On my YouTube channel, I have several interviews with different life insurance salespeople. Big Tank is one of them. He's in that playlist. That's one place to go. Tank, where else would you recommend?
Website, nonprofit, not affiliated with any insurance company. Lifehappens.org.
Yes.
And it's going to be popping starting tomorrow, because starting tomorrow is Life Insurance Awareness Month. Lifehappens.org. And they love our community. Like last year, Kelly Rowland was the spokesperson for September. They do a really good job with diversity. That is where I take. So we have a program at Wealth Our Way called the Wild Wealth Jumpstart, where we help you get your 4 key estate documents. We do a retirement plan review and a life insurance review. And the first place I take people is to lifehappens.org to show them a human value calculation as to how much insurance they should have from a party other than myself or an insurance company.
Oh, thorough. All right, so this is the homepage for Life Happens. Yes, yep. I use it often. So they have Insurance 101, calculators, right? You just talked about human value, right?
Mm-hmm.
I like to use income.
Okay.
So I like to do the multiple of income. My favorite multiple, because normally, depending upon your age, you can get about 20 times your income. So if you make $50,000 a year,
$1,000,000.
you can get $1,000,000. I think everybody should have $1,000,000 if you have kids.
Yeah. Was that fine ass
Because
Rosalind Sanchez? I'm
be
sorry.
careful now. I don't want to get me too out here, brother.
It was Rosalind
But
Sanchez.
here is the insurance 101, life insurance 101. And yes, Monica, please be a diligent advocate for your own education. All right. There's a question here. Self-made SM, right? Self-made SM said, all right, what's the podcast? The Finance Rebel Show podcast. Finance Rebel Show podcast on YouTube. You can find it there. Finance Rebel Show podcast on YouTube. Mark Daniels, my man from Wichita. Kamari and Tank, great talk tonight. Glad I was able to tune in. Wichita. I know you Wichita because you know my guy out there. He spoke very highly of you.
Shockers in the building.
All right, Monica Taylor, I will definitely follow up with everything. All right, wonderful, wonderful, wonderful. Listen, y'all, I want to thank Tank. Make sure y'all go follow Wealth Our Way Network on YouTube. Tank, where can people find you other than Wealth Our Way Network?
So on IG, my personal page is Wealth Our Way Founder, but the company can always use the support, and that's just Wealth Our Way. It's WEALTHOURWAY. Wealth, not my way, not your way, but our way. Wealth Our Way on IG, on Facebook, and Wealth Our Way Network on YouTube, because we have a network of shows. So I appreciate any support you guys show me. And Kamari, thanks, man. I love that we the mutual brainstorming, but the respect. And I love when we differ on our opinion, because there's very few people who I respect like I respect you. So I love to butt heads, even though we don't do it that often. But when we do it, it's very productive.
Well, you know, it's all love, and it's all in the spirit of being a financial nerd. So
Yes, sir.
it's all about the community at the end of the day. I mean, both of us do this to really help further education in the community. We're not really doing it to make money, because there's other ways to make money that would be way more profitable than
No
this.
doubt.
But again, I appreciate everyone that is here. As always, I'm the Finance Rebel. Remember, nothing good happens when you're just average. You have to make a conscious decision to rebel and do something different.
Love
Don't
it.
go with the status quo. Be the change you want to see. Until the next time, everybody, Kamari Ellis out. Thank you for watching the Finance Rebel Show. Bye-bye.